Australia.
And I think you started selling them in like December of 2019?
Yeah, so we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer, so vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LQ,
Yes,
schedule a doctor's appointment.
no problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousy things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us. Because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
You need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. How do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the, like, profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And very good afternoon, everyone. It is Tuesday, April 11th, 2023. Carol Masser live in our Bloomberg Interactive Broker studio, streaming on YouTube and Bloomberg Quick Take. You know Tim is on leave, but lucky for us, back with us is Bloomberg News Deputy Team Leader for U.S. Equities, Jess Metton. And Jess, interesting day, Dow outperforming. I'm not quite sure what that tells us.
Right, because it's these more cyclical type oriented corners of the market that are outperforming. You're seeing tech a little bit under pressure, but still it seems like it's just this wait and see, right, Carol, ahead of that big CPI report tomorrow.
We are all in on inflation, global inflation, and economic outlooks. We've got the IMF reset when it comes to global growth and inflation. And then we're going to take a look at CarMax shares on a tear. I bet you've been talking about that a lot.
Oh, I definitely have. That's a big mover there. And then, of course, speaking of cars, we're going to get into the latest automaker to put money where its mouth is when it comes to EVs. So you can take a couple guesses what we're talking about there.
Billions and billions and billions are coming in.
Definitely. And the U.S. CEO of eToro on the underbanked, plus finding faster cures and accelerating the future of health with none other than Mike Milken.
Yeah, we're talking about Mike Milken, well known, obviously, for what he has done in terms of the financial community, but he has spent many decades really thinking about health. It's a personal story, so we're going to get into his new book, so looking forward to that in our 5 o'clock hour. And then we're going to get to the chain smokers that are dancing through the Silicon Valley downturn. This is a story that only can be done by our Devin Leonard. It is in the new issue, double issue of Bloomberg Business Week. So do you listen to them?
Yes.
Do you?
Yes. So I'm one of those. I'm definitely looking forward to this. I think it's going to be a real fun one that we'll have closer toward the final hour.
I love that. I love that. We'll get into that indeed and take a look at the trade. As we just said, we are seeing stocks well off their lows of the session. We've got a 2-year note back above 4%. So it's interesting. We do have a very closely watched CPI inflation report tomorrow, and that's just as bank earnings will get underway. Right now, we want to kind of take an assessment of the markets right now. Head over to our TV colleagues. That's because Countdown to the Close, radio, TV, YouTube, and originals starts right now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic alongside Katie Greifeld, joined right now by our colleagues Carol Masser and Jess Menton. Welcome to all of our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Volume here in the equity markets remains well below 20-day averages. That really is the setup, Carol Masser, I think, into the economic data that appears to be what the market is waiting for.
All right, but don't we all wish that we had bought Bitcoin at the beginning of the year? Because, man, it's been on a tear. I know you guys were talking about it earlier. Above 30,000 for the first time since June of 2022. We're talking about an 80% jump to the upside this year alone, bolstered by bets on easier monetary policies. We've seen crypto names really on a tear. You've got MicroStrategy, too, up about 6.5% in today's trade. The company's executive chairman, Michael Saylor's story on the Bloomberg about that more than $4 billion bet on Bitcoin finally profitable again. And then take a look at some other names. Coinbase up 5.7%, Jess, and then you've got Riot Platforms, a big outperformer. It's up almost 17%. So crypto on fire today.
One chart that I was keeping a close eye on this morning, Carol, was the latest data from the NFIB survey. So looking at U.S. small businesses, they're basically facing their worst credit crunch in a decade. And this comes obviously after what happened in recent weeks with SVB. So a net 9% of owners who borrow frequently said financing was harder to get compared to 3 months earlier. So, Romaine, it kind of makes you think about sort of this argument of whether or not the markets are indeed doing the tightening when it comes to what the Federal Reserve actually wants to see right now.
Absolutely. We talk about the holding pattern we're in. We take a look here at the broader markets, and S&P 500 up fractionally here on the day. We should point out volume down about 30% from where we would normally be at this time. The Dow Jones Industrial Average and a lot of the cyclical names still out front, similar to what we saw yesterday. The Russell up more than 1% here on the day. Transports up more than 1% here on the day. S&P 400 mid-caps up more than 1% here on the day as well.
And if we take a look at the sector level, it's a really interesting story. You have 10 of 11 sectors in the green right now. Just one is in the red, and it's technology, down about 0.6%. Then you look at what is leading gains right now. It's energy, up more than 1%, 1.2% to be exact. So an exact flip-flop from what we saw in the first quarter when energy was on the back foot and big tech was leading. Not the case, at least for today.
Yeah, not at least for today. If you're looking for bright spots, keep an eye on Boeing. Those shares have been moving higher here, up about 0.6% here on the day on the back of those first quarter delivery numbers exceeding Airbus for the first time going back to 2018. Then also you're looking at Whirlpool. In fact, a lot of the consumer durable and consumer apparel stocks are rallying. We saw this yesterday, and that happens today. Whirlpool up about 4%. Mohawk Industries, one of the big outperformers in the S&P 500 on the day. Meanwhile, Microsoft, of course, one of the big point contributors to the S&P 500, down for a second day, down 2% here. And of course, a lot of discussion, big reminder here at the bottom of your screen, Virgin Orbit trading at 12 cents a share, down 31% as that company faces delisting after, of course, it basically is announced that it was actually going to wind down operations. A lot of concern about some of these balance sheet companies that maybe don't necessarily have a path forward. I do want to go back to the macro data, Madison. You were just talking about, of course, some of what we could get and expect, Jess, out of the economic data. I was looking a little bit forward here to the retail sales numbers that we're going to get on Friday here, and the idea that most economists are expecting a bit of a contraction in the most recent quarter, despite that big bump up that we saw back in January, which a lot of people said was a blip, and that the real number was either a flat line or down below, and that appears to be what we could get when we see those Friday numbers, Jess.
Okay, you got it right. Romaine, yeah. Okay, so having said that, there's a lot of talk about kind of credit crunch or lack thereof, if you will, and whether or not the Fed's going to raise rates or not. There's some division among Fed officials, certainly on the Bloomberg. You can read about it. U.S. Treasury Secretary Janet Yellen, though, in a press conference earlier in Washington, she said the economy better than it was 6 months ago, shrugging off the recent banking turmoil, said it had restricted the availability of credit here in the United States. Here's what she had to say.
I've not really seen evidence at this stage suggesting a contraction in credit, although that is a possibility. The U.S. economy is obviously performing exceptionally well with continued solid job creation, inflation gradually moving down, robust consumer spending. So I'm not anticipating a downturn in the economy although, of course, that remains a risk.
And that, of course, is U.S. Treasury Secretary Janet Yellen earlier in Washington at a press conference addressing that consumer spending, that chart I was thinking about, Romaine, that you brought up. But what?
Yeah, well, I mean, there's not to quibble. I mean, when we talk about, the economy is in a better place 6 months ago, I mean, I know she didn't actually provide any data or quantify that, but I am curious.
But she gets to see a lot, so let's be fair.
Yeah, and we get to see a lot, too. I mean, this is a pretty transparent economy we're living in here. We talk about
So you don't think she's telling the truth? What are you saying?
That's not what I'm saying. I'm talking about a 3.2% growth rate that we saw in GDP in the third quarter that decelerated down to 2.6 in the fourth quarter, and another deceleration that most people are expecting for Q1 numbers here. So no, it's not about whether she was lying. I'm sure she has a perspective, but at least on some of the headline figures, no, this is a softer economy.
Well, if we dig into some of her perspective, the fact that she says that she doesn't see any signs of a credit crunch, assuming that's true, that's a big deal, because if you think about one of the boogeymans haunting this economy right now, besides inflation, it's the idea that credit could become less available. And if you think about the commercial real estate market right now, which is where it seems like a lot of the worry is focused, regional banks, these mid-sized banks, that's where that industry gets the bulk of its financing. So if that's true, if there really aren't any signs of a credit crunch, that's good news for a troubled market.
And we did hear from Austin Goolsbee, a voting member of the Fed, earlier this afternoon. He was calling for looking at, when it comes to what's happening, this policy caution with all this. But we actually are going to hear from two other voting members after the bell. So we have Patrick Harker and Neil Kashkari. And Neil is one of those who, obviously, as you know, he was once thought of as a dove, then was pretty hawkish last year. So it's going to be interesting to hear what they have to say, obviously ahead of the big CPI report tomorrow.
First name basis. I love it. Neil.
And I am curious, though, too. I mean, I know we're focused on the macro, but then when we start to hear the bank earnings, you're going to get a better read, on lending conditions and the willingness of these banks to lend. But then as we get deeper into earnings season, it really does go back to this idea of economic activity and whether it's holding up enough to support some of the valuation.
Got to say, investors are enthusiastic about the banks. Look at the KBW Bank Index up 1.4%, so some outperformance, certainly.
Are you enthusiastic about the banks?
What?
What does Madison Mills think about this?
Where is she?
Goodbye, everybody. We'll be back in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will be back. Jess Minton is with us, everybody.
I love Jess.
We'll see you at 4 p.m. Wall Street time. Yeah, I would say it does feel like we're under pressure, certainly when it comes to the economy, still inflation pressures that are out there. As you've been hearing, as we just talked with our TV colleagues, IMF warning it was too soon to sound the all clear from the turmoil that's shaken the world financial system, and saying the banking breakdowns will likely be a drag on global economic growth. The IMF trimming its global growth projections, warning of high uncertainty and risks as that financial sector stress adds to pressures emanating from tighter monetary policy, and then, of course, Russia's invasion of Ukraine. So some quarterly update numbers in terms of what we are expecting. So let's get to our market and economic roundtable today. Bloomberg Economics Chief Economist Tom Orlik with us on the phone in D.C., and Bloomberg News bond market reporter with us via Zoom in Arizona, Alex Harris. Hey, Tom, I want to kick it off with you. Last week we heard from the IMF. They warned about five-year global growth outlook weakest in more than 3 decades since 1990. We got more from the IMF today at those spring meetings. How would you characterize what's going on?
So the year started, if we can sort of throw our minds back that far, Carol, with a certain amount of optimism. We had China reopening quicker than expected. We had warm weather in Europe enabling Germany and other countries to dodge recession. US appeared resilient to the impact of Fed tightening. The last few weeks, though, have brought a sort of flood of bad news. The collapse of Silicon Valley Bank, the emergency rescue of Credit Suisse, fears that that could be potentially a sign of worse to come as rate hikes continue, fears that banking stress will lead to a credit crunch. And it's those recent negatives which are really driving the IMF forecast. That's what's pushed them to downgrade their call now to just 2.8% growth this year. Broadly in line with what Bloomberg Economics is expecting. Our forecast calls for 2.7% growth.
And Alex, I want to bring you into this conversation since you are a bonds reporter and you have a really interesting story on the terminal today talking about how BlackRock is even more convinced that inflation is going to remain sticky. What's their latest call?
So yeah, they've been overweight inflation-linked debt for the past couple of years, and now, given last month's data, they're looking at it and going, well, wait a minute, we really don't think that inflation's coming down. Like, it'll come down, but they're not going to be able, the Fed's not going to be able to get back to that 2% level. So they're actually increasingly overweight inflation-linked debt. So they're very confident in this call, and this is where they want to be, because they're saying, well, okay, yes, you are seeing some softening in inflation, but we think that there are some structural issues that this is going to persist. And, the Fed is going to get to the point where the economy might actually crack, and they're going to have to stop cutting interest rates. And so they're never really going to hit that 2%. So, this is something that they're just going to have to live with, where we have, sort of stubbornly high inflation.
Tom, I do think about, we go back and forth about what the U.S. central bank's going to do and so on. But I mean, it is very clear, and it's a global inflation problem, that it is a lot stickier and persistent globally than everybody had anticipated. And that is going to be a drag on economic growth for some time.
Yeah, I think that's completely right, Carol. We've seen inflation come down from the altitudinous peaks that we saw in the second half of last year, and that's certainly a relief. But what we've had so far is the easy bit of deflation. We've had energy prices coming down, and that's what's been driving it. The sticky piece of inflation, the piece of inflation which is coming from wages and costs in the services industry, that hasn't gone away. And the concern is that getting rid of that sticky wage-driven inflation is just really costly. And so perhaps we'll have more things breaking, more stress in the financial sector. Perhaps the U.S. will tip into a recession. That's the call from Anna Wong and the Bloomberg Economics U.S. team from the second half of the year. And perhaps the cost of getting inflation back down to that 2% target is just going to be too high. I think that's what's behind that call from BlackRock and the on going overweight on inflation-linked debt.
Hey, Alex, do you think that investors are underestimating the persistence of inflation right now?
Yeah, I think they are. I also, it's a new quarter. I think everyone's just trying to regain their footing, obviously. The banks are a really big issue. I think what you saw last month, I don't think it's quite over. Yes, there are certain issues where those particular regional banks, had specific issues that were their problems. But I think, if you look at any bank, everyone's got available for sale securities in their portfolio that are underwater. I think all of these banks are dealing with deposit outflows because they are very much lagging money market funds when it comes to passing on Federal Reserve rate hikes. I think there's so many issues here, so I can see how, at least in the last month or so, inflation has sort of taken a back seat. And I think what the data will tell us tomorrow is whether or not is that something that should be back on the front burner now amid everything else that's going on.
Hey, Tom, when you look around the world and as I was going through the IMF numbers this morning, and I was thinking about, Warren Buffett turning his focus back to Japan and, telling the Nikkei that he's mulling a boost to his stock investments in that country shortly after Berkshire kicked off a yen bond sale. So I do think about, when you look around the world, which economies look on the kind of surest path, if you will?
At the moment, Carol, it's kind of tough to identify big winners in the global economy. You've got the United States and Europe both wrestling with above target inflation, both waiting for the impact of central bank tightening to hit the economy. And then you've got big emerging markets. Think about China, where you've got stronger growth, but really it's an artifact of that delayed reopening from COVID lockdowns, a one-off boost, which will probably have run its course over the first half of the year. And when that's over, what does China still have to deal with? Well,
the legacy of massive overborrowing and overbuilding and increasingly fragmenting relationships with the United States.
Right. Yeah, we've seen that movie before. It's called The United States. Like we're dealing with it. Tom and Alex, thank you so much. Tom Orlik, Chief Economist at Bloomberg Economics out there in D.C. Alex Harris, bond reporter at Bloomberg News on Zoom from Arizona. Hey, while we're talking about outlooks and more specifically inflation, in today's Wall Street Week daily segment, Bloomberg's David Weston spoke earlier with Bob Diamond, former CEO of Barclays, now CEO and founding partner of Atlas Merchant Capital. Diamond, like others, talking about inflation staying with us.
I think inflation has peaked. It's working its way down. As we have also talked about, the Fed waited way too long. But given that it was just a year ago that they began the rate increases, I think the impact on slowing inflation and slowing the economy is taking its impact. But on the other hand, will this be a deep, dark slowdown? Not in our opinion. I think the stimulus that came in during COVID has meant that we've had very, very robust balance sheets, both kind of corporate and institutional as well as personal. I think the labor market has stayed strong. I do think there's been a bit of weakness in wages just recently, which I think the Fed would be pleased with. So our sense is there's a real slowdown happening. Our sense is that the economy this year will continue to be very choppy, and we'll see various accidents happen because of poor balance sheets driven during the long period of monetary easing. But that this will be a longer correction, but a milder correction than I think we're anticipating a year ago.
And that's the voice of Bob Diamond, former CEO at Barclays, now CEO and founding partner of Atlas Merchant Capital, talking with Bloomberg's David Weston. Check out the full interview and be sure to catch this Friday, Bloomberg Wall Street Week with David Weston at 6 p.m. Wall Street time on Bloomberg Radio. This is the trillion-dollar question, Jess, in terms of, figuring out soft landing, hard landing.
No landing.
No landing. What happens? What do we see from global monetary policy? I mean, I think there's a lot of questions, and earnings maybe will give us some clarity, right, from CEOs, but
right, because things have been shifting less so more when it comes to macro and more to the micro as far as what our chief executives as well as Fed speakers are going to say about the direction of the economy. That's what's going to be full focus, especially the next few weeks ahead of that Fed meeting in early May.
Absolutely, and what they say about the macro is going to be so key, right, in terms of just some transparency. Like we think about during the pandemic when people wouldn't even give forecasts and outlooks, but we do get specifics, and hopefully that will tell us something. So we'll be looking forward to that, of course. Inflation tomorrow, that'll be important, especially when you look at the core numbers to see what kind of drawdown, if any, we get on that. And then, of course, we kick it off with the big banks.
Right. Also, PPI on Thursday, which the spread between the two is very important, and that's something investors keep a close eye on as well.
All right, Carol Master, Jess Metton, you are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check markets all day long here at Bloomberg. 39 minutes to go until that closing bell clangs on Wall Street. The Dow higher, S&P very close to session highs. NASDAQ, though, lower and in the red. Down 3 points on the composite index, a drop right now of less than 0.1%. S&P up 14. That is a gain of 0.3%. The Dow up 185, up by about 0.6%. Bitcoin above $30,000. Bitcoin now up 4.6%, 30,495 on Bitcoin. We've got the 10-year yielding 3.43%, with a 2-year that's yielding 4.04%. Gold up 0.7, 2005 the ounce. West Texas Intermediate crude up now by 2.1% at 81.43 a barrel. As for the overall market backdrop, Alicia Levine is head of equities and capital at Bank of New York Mellon.
The market is agnostic right now on the recession, and I do think the market is clearly not pricing in a recession, but neither is it pricing in a soft landing, and it's pricing in a wait and see what happens.
And speaking of wait and seeing as to what happens, CPI report tomorrow morning, complete coverage. The number drops at 8:30 a.m. Wall Street time. CarMax beat Wall Street's earnings estimates as the auto retailer squeezed more profit from each vehicle. CarMax up now by 10.7%. Rival Carvana up by 5.7%. Recapping, stocks are higher. Best level of the day right now. S&P up 14, up 0.4, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And Charlie setting us up so beautifully. CarMax shares, by the way, are up about 20% this year, but a big rally certainly in the trade, as Charlie just noted. It is, by the way, the number one gainer in the S&P 500 today, rallying as the company beat Wall Street earnings estimate. The auto retailer squeezing more profit from each vehicle, always important, countering a sales drop and softening used car prices. I mean, this was a pandemic darling, and it's gone through some rough times, but this is a big pop.
This definitely is, and so I'm pleased to say that we do have David Welch, the Detroit bureau chief at Bloomberg News. He's on Zoom from Detroit joining us. Now, David, kind of walk us through here, because just like Carol was talking about, this was a pandemic darling. It obviously has gone through a lot of different obstacles, but what's driving shares today?
It's a bit of an odd reaction, honestly, because if you look at their numbers, yes, they beat, but profits are still way down. Revenue is way down. Vehicle sales are way down. But what I think investors are reacting to is that maybe the worst is over in the used car price decline. Used car pricing hit insane numbers, huge records in about this time last year. Springtime last year, there were used cars that were selling for more than new cars that were comparably equipped, because there was a scarcity of new vehicles due to the semiconductor shortage. And then it started softening up, and then used car prices didn't collapse, but they fell pretty steeply in the second half. CarMax got hit. Carvana got hit really hard. They're in pretty deep trouble right now. And I think the fact that used car prices are stabilizing a bit, and that CarMax was able to, through some cost cutting, through some leaning up, beat estimates, kind of tells investors that the company is managing this situation where used car pricing is still softer than it was a year ago, but maybe there's some stability there and the company has a handle on it. That's my interpretation of it, because the other numbers really weren't great.
Well, that's what I was going to say, David. It's kind of one of the things, okay, numbers not so great, everybody, but maybe the worst is over. So that's kind of how we need to read it, or that's at least, It seems like how investors are reading it.
Correct. That's the best interpretation I've got, and I think it's actually probably the right one, because we have seen, remember, these are fourth quarter numbers, and we've seen in the first quarter, not CarMax numbers, but we've seen pricing in the used car market, and it's actually bounced back a little bit. So if you put the two together, you have a fourth quarter that's not terrible after the third quarter kind of was terrible. So, okay, stability in a quarter when used car pricing was falling, and then you've got a bit of a bounce back and some stability in the first quarter, so there's hope that they can quickly turn the corner. And CarMax is a pretty good operator. Carvana's got a very troubled balance sheet, took on a lot of debt. It's not clear they can get their costs under control. So I think right now, Carvana stock still got a pop today off of this news, which tells you that they're reacting more to the used car business than the total business. But I do think CarMax is seen as a better operator. So if there's some, if there's a nice bounce in the used car business, then CarMax is probably going to get an outsized portion of that.
Well, as Charlie mentioned, Carvana is up about 5.7% so far today. If I take a look, it is up 107% today. But as you said, not necessarily apples to apples. Just a little perspective, David, in terms of CarMax numbers, are we where we were pre-pandemic? Because I keep thinking about this great reset off the pandemic, right? Numbers just on a lot of things went off the charts. And we understand why. So I do think about comparisons to 2020 as being kind of quote unquote more normal. So are we back to 2020 levels on CarMax or not quite yet?
The car business is still not back to where we were pre-pandemic. And that's large. I mean, it's been such a bizarre 3 years for the car business because you've had these just huge supply shocks, part being people weren't working for 3 or 4 months during the pandemic. And then when that turned back to normal, we had the semiconductor shortage, which is really the bigger story in all of this. When new car companies, General Motors, Toyota, everybody can't make vehicles and people need them, they go to the used lot. And that's what drove prices up to insane levels. They're still relatively high compared to what we've seen historically. The average monthly payment for a used car is still well over $500. And, pre-pandemic, it is. Pre-pandemic, the average new car monthly payment was $400 something, I think $420. So these are still expensive vehicles. And that's one thing that was called out, which is why I still think the market's huge reaction to this CarMax thing was a little bit surprising to me, because one thing CarMax called out was that inflation and interest rates are keeping people away from the lot a little bit. And that's why their vehicle volume sales weren't as good. People are getting sticker shock here based on inflation and interest rates. It is. These are expensive vehicles.
And David, something that struck me too is CarMax was pointing out how there were also tighter lending standards in this report. And I thought that was interesting because is this another sign that the Fed's tightening cycle is beginning to filter more through the economy now when you're seeing this happen in companies like CarMax?
It is. It's one thing on the earnings call that they brought up is that some of their lenders are pulling back, not so much on prime loans. People are always willing to lend to people with good credit and money, but going down into second tier, they said was tightening up. They said they still have enough lenders on the arm where they can get deals done. But, we've been hearing about this in mortgage lending and certainly in capital markets for companies too. And, when you start to see it in auto loans, that's when the credit markets are tightening up, because there's sort of an old axiom that people will pay their car loan. It's the last thing they stop paying on. The first thing is credit cards. Who cares? Later. Second thing is their mortgage, because they can always go rent an apartment, but they need the car to get to work.
Or they can live in their car, unfortunately.
And or just get a crappy apartment, something. But they need the car to get to work, so people will pay their car loans. It's the last thing they stop paying on. So it's lenders see it as a relatively safe business. There have been some real train wrecks with subprime auto lending in the past, but when it starts tightening up, that's when lenders are starting to scrutinize.
The other thing, David, like on the report, they also talked about CapEx, and they're adding stores. And their CapEx was above what the estimate was. So they're at least optimistic enough to expand, or at least do some expansion.
They are. I wrote about back in February, talking about vehicle affordability. And I'll get around to your question on expansion very quickly. Used car prices and new car prices are going to stay up for a while because there's a lot of demand out there. Toyota estimates that somewhere between 4 and 7 million people have not been able to find the car that they wanted or needed over the past 2 years. So even though there's talk of recession, even though there's rising interest rates and high inflation, and that's got consumers nervous, we also have very low unemployment, and we have a lot of pent-up demand in autos. So I think CarMax is probably saying, hey, there are people out there who still need new and used vehicles, and we can be there to provide them. So they're going to keep expanding, and I think you're going to see that throughout the car business, where they're not going to really pull back on production unless we do recession and it hits hard.
What's the next key indicator as far as when you're looking at these different companies that are related to the auto industry that you're keeping a close eye on to see where the other cracks could potentially be forming there?
It's all about pricing. So used car prices have, they dropped in the second half of last year, and then we've seen them bounce back January and February. So there's some strength there. I think we'll continue to see that because usually we have between 3.5 and 4 million vehicles come off lease every year. Those are the prime used cars that everybody wants. But we had about 500,000 fewer cars being leased per year over the last 3 years. That means fewer of the best used cars coming back to market. Means pricing is going to stay, I think, fairly strong. And then on the new car side, pricing is even more important in this cycle because it's we're getting semiconductor chip flow again. We're seeing production come back with new car companies, and if they start discounting, then we kind of get back to the old paradigm. Right now, we're not there. Right now, prices are still very small, but we'll see.
I'm looking forward to some discounting, man. Looking at some car prices, it's like off the charts. It's nuts. David Welch, thank you so much. Really appreciate checking in with you on this Tuesday. Detroit Bureau Chief at Bloomberg News on Zoom in Detroit. Check him out on Twitter at David Welch BN. Do you own a car?
I do not. I did when I was in Texas, but I sold it 12, 13 years ago.
It's so expensive, like, to try and do it in the city.
Yeah, no way I own one in Manhattan. No way.
All right, everybody. You're listening and watching Bloomberg Business Week. Carol Master along with Jess Metton. Right now, let's get off to world and national news. Nancy Lyons on it in our 901 newsroom in Washington, D.C. Hey, Nance.
Thanks, Carol. Manhattan District Attorney Alvin Bragg is suing Republican Congressman Jim Jordan in an effort to prevent him and other lawmakers from interfering in the criminal case against former President Trump. Bragg's 50-page lawsuit accuses Jordan of, quote, a brazen and unconstitutional attack on the prosecution of Trump and a, quote, transparent campaign to intimidate and attack the district attorney. The House Judiciary Committee is scheduled to hold a hearing in Manhattan Monday on crime and what it alleges are Bragg's pro-crime anti-victim policies. The National Security Council's John Kirby is addressing those leaked documents that reportedly show that Egypt planned to send Russia 40,000 missiles to use in its assault on Ukraine. He was pressed by reporters on whether the U.S. has fact-checked the details with Egyptian officials.
I am not going to talk at all about the details of diplomatic conversations that we're having. We are reaching out and speaking appropriately to relevant allies and partners. I'm not going to detail who, and I'm not going to detail the details of those conversations.
Kirby spoke on Air Force One that's flying President Biden to Ireland. The number of legal abortions in the U.S. has slumped since the Supreme Court overturned Roe v. Wade last year.
A new report from the Society of Family Planning finds there were an average of 77,073 abortions per month in July through December of last year. That's a 7% drop from the average in April and May, the 2 months before the High Court overturned abortion rights. In the dozen or so states with the toughest restrictions, the drop was 96%. The report also finds patients turning more to telehealth for abortion care. In April of last year, virtual care accounted for 4% of abortions. By December, it was 11%. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We are looking at a late-day fade right now for the S&P 500 index. We do check markets all day long here at Bloomberg. The Dow, the S&P, they're higher. NASDAQ lower. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed right now, with the Dow currently higher by 149 points. S&P's gained 7, while NASDAQ is down by 35. The U.S. 10-year yield at 3.42%. Gold is higher by 15, oil trading in the green. And Bitcoin is higher by 4.3% and trades back above 30,000. Among the main 11 S&P sectors, only tech was in the red, and leaders to the upside in the Dow, Caterpillar, 3M, and Nike, while Microsoft fell 2% and led to the downside. After earnings, CarMax rose 10%, and in deal news, the Wall Street Journal reported that Carrier may sell or spin off its fire unit. In other news, Boeing Q1 deliveries exceeded Airbus for the first time since 2018. And wrapping things up, Visa partnered with PayPal and Venmo to pilot the Visa Plus. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got, about 17 and a half minutes left in today's trading session here. Charlie, talk a little bit about a late afternoon flayed. There's a new technical term, fade, although we're just off our best levels of the session. But again, it's light volume, right, Jess? I mean, you watch the markets, tick by tick here, and it does feel like we're just waiting for inflation, we're waiting for earnings. There's a lot of things we're waiting for.
Definitely when you're looking at that 20-day average, that being down. And so really, like we were talking about, all eyes ahead on Wednesday's CPI report, Carol.
Yeah, so let's get to it in terms of what our next guest has to say when it comes to the market outlook. Brian Jacobson is Senior Investment Strategist at Allspring Global Investments. It's an asset management firm. They've got roughly $465 billion in assets under management. And he joins us from Milwaukee, Wisconsin on Zoom. Brian, how are you?
Doing really well. Thank you for having me.
Great to have you here with Jess and myself. What do you think is the most constructive conversation to be having about the markets? Because we can talk all day about what the Fed might do, where inflation might go. There's a lot of things we can just talk about, but it's going to be, the data will bear out. We'll see how it all plays out. And we know that unforeseen events, whether it's a war, whether it's banks collapsing, a lot of things can come at us that we weren't kind of having on our radar. So how do you describe it right now?
Yeah, it's a challenging environment, that's for sure. I actually kind of liked your use of the term flayed. I think we should use it's a fade into flailing, maybe, right? So if any of those one things kind of pop up, that could cause quite a bit more volatility. But the way that we're positioning things here and thinking about it at Allspring on my systematic edge team is that we're going to have fairly sideways markets. Now, sideways doesn't mean flat. It means enhanced volatility, and it's because people are almost hypersensitive to trying to figure out the extent to which credit is going to contract, how fast is inflation going to fall, how much will growth slow down as well. So there's plenty of worries out there, and it doesn't seem to us that the markets, especially the equity markets, are really fully pricing in what we think is a good base case scenario, is that we get a slow slide into a shallow recession.
Brian, what do you think is really driving the trade? Because we do have CPI tomorrow, but how much of this is really about what inflation is telling us versus those concerns, and you were talking about those worries as far as whether or not a recession is eventually imminent?
Yeah, it's almost like what's driving the markets now is more what some people call second order thinking, right? It's not about what does the data tell us, but it's more about how is the Fed likely going to interpret the data, because we know that the data that's coming out tomorrow is backwards looking, that it's for the month of March. The data that we get out on retail sales, industrial production later this week is also backward looking. Same thing with earnings season, right? So it's more about how is the Fed going to react to some of this information, because it's pretty clear to us that the Fed has moved very fast, and that prudence would dictate that taking a pause here might make a lot of sense to see how things play out. They don't really have to be too much in a hurry to hike, 25 more basis points. It's almost like they're kind of pretending that they can, do some fine tuning to the economy if they think 25 basis points is really going to matter that much to the longer term outlook for inflation and growth. But it does matter a lot for the markets, because if they hike 25, despite what we think is going to be somewhat weaker data, it suggests that they really do have their blinders on and aren't going to be properly reacting to what is likely to be that slow slide into a recession here.
All right, Brian, 2 buckets, stocks, bonds. Where do you want to be?
Both, is that an option as well? Another one of our themes is the idea of trying to diversify your diversifiers, right? Stocks versus bonds is a great way to diversify. And even if they are positively correlated, so if stocks sell off at the same time bonds do, that's not a great position, but as long as you can dampen the volatility in the ride, you can still get some diversification. We like looking within the different buckets. Say right now we're favoring the NASDAQ 100 over the S&P 500. It's mainly because we like the profitability of those big tech firms. So it's trying to get that factor exposure that
so
we really
even
want.
though people are like, wait a minute, they've had quite a run already. We've talked about it certainly a lot at Bloomberg, that they've had their run. The valuations have kicked up again on some of those big tech names. You say that's where you would rather commit than some of the names in the S&P 500 more broadly.
Yes, we would rather commit to that profitability and that quality factor, which we think you can get with that NASDAQ 100 relative to the broader market. However, we also like that coupling that with small cap value and mid cap value. So almost kind of that barbell approach where small cap value, mid cap value is still, from a valuation perspective, we think fairly compelling. So it's about trying to get those factor exposures within equities. And then within the fixed income side, it's really moving up in credit quality. You're in fixed income mostly for the income, not necessarily for the capital gains potential. And so you want to go for the income, but we like the higher credit quality, because that way, if the equity market sells off, we do believe that we're at levels where bonds, high quality bonds, can rally and therefore sort of offset some of those losses.
What's your time frame for how long you're specifically favoring stocks in the NASDAQ 100?
Oh, great question. So for us, that is more of a tactical trade. So the way that we kind of structure things is thinking about tactical can be opportunistic. It could be like overnight all the way up to, say, like 6 months to a year. Whereas the more strategic allocation is thinking a year out further. And so that NASDAQ versus the S&P 500, we were actually just long the NASDAQ for a good chunk of the year so far, and added the S&P 500 short to that to eliminate some of that market beta exposure. Just because as we are entering this period with the CPI, industrial production, earnings season, we think could be a little bit challenging. We want to take some of that beta off. So it's about trying to kind of smooth off the edges of that equity exposure.
We ask this of a lot of people, Brian, who are managing money and have investors. Is there new money coming in, or has it slowed down?
Yeah, I think that whole new money thing, for every buyer, there's a seller. And so I don't know if there is net new money. Perhaps if you get net new issuance and share retirements, things like that, you can get net new money. It's more about the sentiment, right? Are people on the sidelines? Are their cash allocations larger than what they really want? And for us, a lot of investors are talking about trying to reduce their cash allocations. And
talking or doing?
It's more the talking and coming up with that plan. Great. What is that plan? What are the different guideposts that you're looking for? Honestly, a lot of the investors that I talk to seem to be looking for, say, a 10% correction, say, well, then I'm going to try to get back in. Whereas we're thinking, I mean, sometimes if everybody's looking for a correction, it never happens. And so you may as well just try to get to your strategic allocation, do it in a disciplined way that's comfortable for you from a behavioral perspective. And I think that's what people are really looking at is maybe thinking that this earnings season, we can kind of think about trying to get towards those strategic allocations.
All right, we got to run. Having said that, investors looking for maybe another 10% downside. VIX down below 19. A lot of complacency. Brian Jacobson of Allspring Global Investments, thank you so much. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 7 minutes to go ahead of the close. The S&P just turning negative. Walmart's closing four stores in Chicago, cutting its footprint in the city after losses mounted, and the retailer abandoned hope of turning the locations around. Walmart says it has never been profitable in Chicago. Shares right now of Walmart down by about 0.3%. The luxury hotel segment is set to defy an economic downturn amid growing demand for high-end getaways. And with that story, here's Bloomberg's Denise Pellegrini.
Charlie, Morgan Stanley is predicting the segment will actually end up accounting for a fifth of the lodging industry's revenue globally. A hunger for travel and experiences, along with a growing middle class and demand from China, are all set to boost what Morgan Stanley says is an underappreciated segment of the hotel market. And analysts say while luxury and lifestyle accounts for only 4% of hotels, they see it growing to make up 20% of the industry revenue in the medium term. And the analysts singled out European hotel operators Accor and Intercontinental Hotels Group as having pipelines which they describe as especially skewed to luxury and lifestyle hotels. Charlie.
And that's Denise Pellegrini. Among some of those hotel names, Intercontinental Hotels Group, IHG, up by 0.2%. Hilton shares up 0.5. Marriott International up 0.6%. And shares of Hyatt up now by just about 1.9%. Hyatt at 111.17. And those are some of the company stories that we're following for you at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in the trading session. Carol Master along with Jess Metton. You know, Tim is on leave. Charlie breaking down the trade for you, and we are definitely a leg down. It's like that ski slope. You've got to be really experienced because it's straight down here. Mind you, little change, though. Call it flat on the S&P, as Charlie noted, and just down about 0.5% on the NASDAQ. The Dow just holding on to a 0.3% gain, so just barely. But it's kind of I feel like a meh trade. We are really waiting for a lot of things.
We are, and a lot of this just within, when we're in this last half hour of trading, we don't even have that many more minutes now just going into the closing bell, but really technology is the one that is driving things a little bit lower now just because of that group in the S&P 500 down about 1%.
Jess, I want to get to a story just coming off of the comments from our market guest, Brian Jacobson, over at Allspring Global Investments. He talked about diversifying your diversifiers. He likes the NASDAQ 100 over the S&P because of their profitability and quality. He also likes small cap and mid cap value. Having said that, interesting story on the Bloomberg today from our Augusto Sarieva about more U.S. small businesses reported having greater difficulty getting a loan in March after multiple bank failures led to a further tightening of credit conditions. Watching credit conditions, so important.
And this is the big thing and the big debate we've been talking about, right, Carol, when it comes to the Federal Reserve as far as how this is filtering into the economy. So this is yet another example of what we're seeing this here.
Right, with our simulcast, this
graph. Right. That was a chart we did show around 3 p.m. this afternoon. And so walking through that, but then like you were talking about, a larger share of when you're looking at these small businesses do see tighter credit conditions coming in the coming months as well.
Yeah, matching the highest level in a decade in terms of the share that expect tougher credit conditions the next 3 months. So this is something, Jess, as we get to the big banks, like I find it interesting that the KBW Bank Index, let me just see, it was up about 1.5% at its highs today, still up about 1.4%. We're going to hear from JP Morgan. We're going to hear from Citi, Goldman, Morgan Stanley over the next week or so. And so interesting to see that that group is trending higher. Someone who watches the markets, what do you think about that?
Well, especially when you're thinking about more riskier corners of the market, discretionary, communication services, and technology, those are the ones that are lower today.
All right. We're going to talk a little bit more about the market trade and the macro factors impacting it, along with our expectations for the bank sector. The debate continues about what comes next on a day when we got some update on global growth and global inflation forecast from the IMF. All right, right now, it's time to head over to Romaine and Katie. Our cross-platform coverage Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast. We're joined right now by our friends Jess Metton and Madison Mills. Welcome to our audiences across Bloomberg Television, radio, and originals.
That is a huge compliment. I love both Maddie.
I love her. Jess. She's great. She's fantastic.
Incredible. So thank you, Romaine.
I'm not sure who's talking, but go ahead, Maddie.
Ouch. S&P 500, you know, even though it's kind of meh, not really moving, what is it, down about 2 points here, so call it unchanged. You still have most names in the index, about 364, Jess, that are higher today. So you go internally, you see a little bit of a different story.
And especially looking at this last half hour of trading, Carol and I were just talking about this. Obviously, that leg lower again when we're looking at technology, but then also more of those riskier corners of the market. They're looking at discretionary and then communication services, also a little bit lower as well when you're looking at more of the cyclicals or more of like the financials, the energies. Those were the ones that were gaining today.
And I mean, even this still, if you pick apart this market, there are some interesting things to look at. It really feels like we're at a standstill here, and you can see that on some of the volume data. The S&P 500 trading volume below the 20-day average to the tune of about 24%.
And I was looking at just the broader volume. So you go across all the tapes A, B, and C here. Right now, we're tracking at about 9 billion shares traded. On average, we get up to around 11.5 billion. But this has basically been the trend for the last 3 days. We've been below 10 billion, and that appears to be the setup. I mean, some of that is a distortion from the holiday, of course, with Easter and Passover. But of course, a lot of people just don't want to get out in front of some of the economic data, and more importantly, some of the earnings that we're about to get starting on Friday. The closing bells here in New York. The clapping begins. The Dow Jones Industrial Average, believe it or not, is going to finish the day higher. In fact, we've seen cyclicals really outperform the Dow now on a 4-day run, higher by 0.3% on the day. The S&P 500 looks like it's going to finish the day, we'll just call it unchanged right now, right around 4,100 and change. The NASDAQ Composite decidedly lower, down about 52 points or about 0.4% here on the day. And let's take a look at the Russell 2000. The Russell 2000, which was higher by more than 1% on the day, giving back some of those gains into the close, but still higher for a third straight day, up 0.8%.
Yeah, back to the banks I go. KBW Bank Index remained here at the close, up 1.3%. Katie, you're going to get into the groups, but Citi's up about 1.5%. B of A up almost 3% in today's trade.
Well, let's get to those groups. It's interesting. Even though you had the S&P 500 close pretty much exactly flat, completely unch on the day, you had more green than red if you look at the industry groups. Up top, you have consumer durables leading the way, I think the whirlpools of the world. Then you have the banks having a good day ahead of a very important start of earnings season. Then you go down the list, and this explains why we still did close on a little bit to the downside. You have software and services leading the leg lower, down 1.4%, and then you have semis off by 0.9%. Carol, this was one of the big outperformers, but coming under a little bit of pressure recently.
All right, so that's a look at the group breakdown. Let me get to some of the individual gainers on this Tuesday. CarMax, number one gainer in the S&P 500, up about 9.7% at its close today, beating Wall Street earnings estimates. The auto retailer squeezing more profit from each vehicle, although we talked with our David Welch and said the numbers overall really weren't good, but it's just this case of maybe we've hit the worst when it comes to CarMax. We are still seeing a sales drop and softening used car prices. WW International, formerly known as Weight Watchers, oh my God, this stock is up about 59% in today's session. Mind you, it's about a $6.55 a share stock, soaring.
Yeah.
Largest move
60% here on the day. That's the biggest one-day gain, Carol Masser, since when?
AKA Maddie Mills.
Last month.
Yeah. No, I know. It's tremendous.
I know. I was surprised when I saw that. Yeah.
I've talked with the CEO back in January at a dinner. It's just interesting. She's really trying to kind of move this company, I think, into its next chapter, thinking about technology, thinking about the platform. They also closed an acquisition of a telehealth provider. So really that holistic idea. What? That's
that's a big driver of this. And I think a lot of people are really, and I mean, we should point out, I mean, her background, I mean, she was at Yahoo as an executive for years. So her background is really in that digital space.
Yeah, let's not forget Goldman Sachs also upgrading their rating on the stock to buy from neutral, following the acquisition. All right, so big standout there. And then we want to get to Tupperware. This was kind of a pandemic darling. It's a $1.30 stock. I know that it's a very small cap. Dropped a record 49% yesterday. It's up about 5% today, and we know that this company has hired some financial advisors. So, people just keeping an eye to kind of figure out what comes next. You're a big Tupperware user, are you not, Romaine?
Yeah, I don't think we use the Tupperware brand, but yes, we have a lot of containers.
Okay. Unfortunately, I have the decliners, the losers today, but I'm going to start off with looking over at Moderna. So that stock dropping around 3%, and among the worst decliners in the S&P 500 as well as the NASDAQ 100. So what happened here was it did push back plans when it came to experimental flu shot, and it did have a setback due to a lack of enrolled cases in this late-stage trial. trial. So they did say it didn't accumulate enough data to determine the efficacy when it came to this study, but the company did say it would advance another candidate. Another one that I wanted to point out is looking at what's happening with Tilray. So that's falling around 8% today. So the cannabis producer did report a wider than expected loss. But another big thing that was driving this, the company did announce the acquisition of a smaller Canadian rival when it came to Hexo. It's a deal that was worth around $56 million. But the problem there, it disappointed investors because the offer price was actually less than the stock's value prior to the announcement. So when you're looking at U.S. listed shares of Hexo, those tumbling more than 26% today. And then finally, I have to point out, we were talking about technology earlier, looking at what's happening with Microsoft. So that stock down a little over 2%. So what happened there, UBS did warn about its Azure cloud computing business. So you are seeing that also weigh on other cloud stocks, even say Amazon today down about 2%.
And I'll just add one, Adtran, a small company, ADTN, down about 20% here on the day. There's been a lot of concerns about some of these network equipment providers here and some of the destocking that we're seeing there. Let's go back to the Treasury space. It was somewhat of a dull day in that space, but probably the key part of the story here is a two-year yield still holding at about 4% here, up only about 2 basis points here on the day. That gives you an idea right now of the mindset of some investors when it comes to the Fed and its fight against inflation.
Yeah, and we earlier talked about, the crypto space, right? You got Bitcoin up, closing above 30,000, and you look at things like Coinbase Global up more than 6%. So again, investors, feeling comfortable, Katie, to get back into this space.
And it's been interesting to see that the equities have been outperforming the crypto-linked stocks, if you will. The best performing non-leveraged ETF in the first quarter tracked Bitcoin miners, which is just wild to me. I will say, though, that that hasn't been met with any enthusiasm if you look in the flows. So who's coming back into this space? I'm not quite sure.
And I'm glad you brought up flows, Katie, because since today is Tuesday, we did get the client flows data from Bank of America. So we did see last week, actually, that their clients did withdraw more than $2 billion. And what happened was a lot of it came with real estate shares. Those saw the largest outflows since July 2021, while communication and staple stocks were actually the only two areas seeing inflows. So I thought that was an interesting dynamic with that latest data.
Yeah, it is Tuesday, Jess. Thanks for bringing that up. It's also National Pet Day here. We should also point that out as well. I am curious, though. I mean, we talk about this idea of flows. I mean, and I think it was the Bank of America data from, and obviously it's backward looking here, but the outflows that we saw out of equities, and of course a lot of the positioning in the CFTC data that we got last week, still showing that at least the big speculators are still net short this market.
Yeah, I think that's kind of interesting. And I think all the kinds of flows within the market in terms of kind of understanding maybe where we go from here is going to be really crucial as we, the data points I feel like are somewhat conflicted, whether it's on the economy and the outlook, but watching the investment flows, the money flows is
Carol, have you seen the trailer for this new Barbie movie?
What are you saying?
There's a new blockbuster movie. It's like Ryan Gosling, Margot Robbie. That's heavy hitters there. Will Ferrell, all directed by Greta Gerwig. We were talking a little bit earlier. We had a guest on.
You guys did box office.
Yeah, we had Chad Bynum on, and he really we were talking about the rom-com Super Mario Brothers, and we were just kind of talking about the big releases coming forward early in this year because we saw a lot of those stocks rally hard yesterday, and most of them were up again today.
Well, it's, again, it's this reset. Can I just go back there and just talk about, we're trying to figure out what our way forward is. People are actually going back to the theaters. So
you haven't seen the trailer.
Yeah, she didn't answer.
I have seen it.
What was the last movie you
it's like
saw?
the giant Barbie. I have seen it. It's really well done.
Well, they're humans, right? It's live action.
It's live action.
It looks really good. I'm really psyched for it. The trailers have been really good. I've seen a lot of memes circulating on the internet. So whoever's handling their marketing is clearly doing a good job.
Great
Hasn't reached Carol Master yet, though.
No, I watched it.
She's always a little
Also, Ryan Gosling, you can't go wrong with that, right?
I feel like I'm at Thanksgiving dinner with the family. Like, just pick on me. Just go ahead.
It is going to be interesting to watch those movie theater stocks from here. We know that they got a big boost to start the week, a lot of enthusiasm over the Mario movie. Whether that's sustainable, I mean, we'll see.
Who's been to a movie lately?
Yeah, we all have, Carol. We all have lives. I am curious, though. I was looking at that. Do you know this is going to be rated PG-13?
The Barbie movie?
Yeah.
I believe it.
Is that good or bad? Is that boring or is that good?
Well, I'm just saying, it's just don't take your small kids if you have them. Okay. We can leave it there,
Barbie
Carol.
and Ken, they date. What can I tell you? All right, we're going to get into trouble.
Jess, are you going to be back tomorrow? Because I need to write this down if you'll.
Jess and Maddie will be back tomorrow. Looking forward to that one.
All right. See you, Maddie.
All right, that's a wrap, guys. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We call it Beyond the Bell. We call it kind of crazy Beyond the Bell, but we will see you again. Same time, same place tomorrow.
Yeah, California, you got me running back again. Yeah, California, feels like my only friend.
Yeah, we are taking you to California. We're also going to take to water in California. It's a thing. It's, in general, water, I got to say, Jess, it's something we take for granted. It's become, though, a very important commodity, not accessible to everyone globally. We know that. And now it's an investment play. Here with more on what is being called the groundwater gold rush. Fascinating story that's on the Bloomberg. Peter Waldman is projects and investigations reporter at Bloomberg News on Zoom from San Francisco. Peter, we are all over this story. First of all, welcome. Thank you for joining us today. Our world, our investment world, takes us to some very odd places. Tell us about the groundwater gold rush. What is it?
Sure, Carol. Basically, what you had during these really wrenching years of extreme drought in California was a kind of race to the bottom of the aquifers. You had institutional investors among the agribusinesses and other farmers out here buying up land, planting what are called permanent crops that need large amounts of water, and they include things like almonds is the best known perhaps, where it takes a whole bunch of water and you got to raise trees for many years to get good yields, and pistachios and vineyards, a very well-known permanent crop. And when the drought hit, which you name the date because we've had about 10 years of drought in the last 12 or 13, it caused these institutional investors, household names, TIAA among them, UBS, to drill very, very deep wells to keep these trees alive. And when you drill very, very deep wells, it tends to leave the shallower wells that belong to poor communities and farm worker households and small farmers high and dry. Deep wells drain shallower drills, lo and behold.
So who are, when you're talking about, you were mentioning these kind of key players that are in this, what are sort of the longer term implications of how all of the dangers could roll out of this?
I'm really glad you asked about longer term because it's a little deceiving seeing the deluge, really, of this year's record precipitation in California that has relieved all of us, worried about draconian cuts in water use and so forth. But long term, the trends are very clear. There have been so many sub-average dry years in California, specifically this millennium. That means since the year 2000, they're calling it a mega drought. The last 3 years before this winter were the worst 3 years in 1,200 years. So the long-term trend is very clear, and that, should we continue on this permanent crop expansion driven by institutional investors, among others, will drain the aquifers because every time there's a drought, and that's, every year, every second year, every third year, whatever it is, they have to dig more deep wells. And that water, long term, will disappear. And already we're seeing aquifers compacting, drying out, sort of cratering or imploding, becoming useless. And hydrologists know that when you drain an aquifer, it never returns to its former storage capacity. So long term, we're looking at essentially mining our groundwater for short-term gains, selling almonds largely to Asia.
So, Peter, where's the oversight? I'm trying to understand because I feel like water, like power utilities, like they're involved in this. There's a lot of oversight of this. So where is the oversight or somebody to say, wait a minute, we got some problems here?
So like many things in the West, we're very slow to regulate, even in California, the regulation-heavy reputation more recently. But over the literally century or so, now we're really at about 170 years since the gold rush, when many of the legal, much of the legal regime was laid down, there was no regulation of groundwater. And until 2014, so that would be Jerry Brown's third term in office. He was there in the 70s. He came back earlier, about 14 years ago. And then during his third term in office, 2014, the legislature at his behest passed a groundwater regulation law in California for the very first time. But it was so deferential and is so deferential to landers, given their tradition of essentially doing whatever they want and owning whatever they want beneath their land, that the sort of horizon for sustainability in terms of requiring these aquifers to be regulated such that the outflow of water for irrigation is only equal to the inflow from other natural sources, whether it's rivers or rainfall or snowmelt. It has to be equal, but it doesn't have to be equal until the year 2040 under this California law. So it gave this sort of incentive to these farmers who were, what in our story covers, the institutional investors who planted all these trees to just sort of have this race to the bottom and drill, drill, drill. So you have these 1,200-foot wells popping up all over the place, belonging to these very wealthy outside investors. And they're right next to little farm worker villages, small farmers, as I've been explaining.
Is there like an eminent domain? Is there like an eminent domain that like the government can come in and say, hey, listen, we got to make sure there's water for our people?
Well, they do have regulations for groundwater now as of 2014. It's just so slow and so ineffective. That law basically in 2014 paid so much deference to the farmers and to the way historical water rights work that they just didn't have any real enforcement, and it has a very, very long phase-in period, not conducive to drought.
Brian, it sounds like this is the antithesis of sustainability.
Well, it's a good way to put it. It would seem that many of these large investors who really do paint themselves in green. I mean, if you go to the websites of almost any investment firm nowadays, whether it's a big private equity player or even a smaller player that just invests, tens of millions of dollars of investor money in farmland, they will have pages and white papers on their websites about the sustainability and their stewardship of the resources. This, I think, was not their finest moment, and we're actually not accusing anyone of breaking the law. I think the problem is the law was just too permissive.
Yeah.
But
too late,
the TIAAs of the world, the TIAAs of the world that just pledged green sustainability principles didn't think a lot about it when their trees were dying and they had, tens and tens of millions of dollars invested and they needed to drill those wells.
I'm sorry, Peter, of course, is what I meant to say. But something else, because quickly, we only have about a minute left, but you were talking about poor communities. What's the detriment of all of that when it comes to those that could be impacted in a very negative way from this?
Sure. That's just simple hydrology. Basically, if you want to keep people with shallower wells, and there are many, many thousands of them. In fact, the auditor of the state of California said last year there were 1 million people without clean drinking water in their taps here in one of the largest economies in the world. And that much of the reason for that is contamination and just drying out of groundwater. They had wells that got contaminated because there were other wells nearby that were much deeper, sucking nitrates and all kinds of other farm chemicals, runoff from farms down into the aquifer and putting it into people's tap water. And the upshot is a lot of people without water because it's either contaminated or insufficient. Deep wells drain shallower wells, and deeper pockets dig deeper wells.
I have to say, it just feels like part of the tipping point when we, everybody just takes it for granted water, but until it's not there, and it's just, climate change and the impact. And this story just really smart and a deep dive into what's going on specifically in California. Peter, thank you so much. Peter Waldman, Projects and Investigations reporter at Bloomberg News on Zoom from San Francisco. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check markets all day long here at Bloomberg. Late day fade on the S&P 500 index, ending the day unchanged at 4108. The Dow today up 98 points, higher by 0.3%. Nasdaq down 52, a decline of 0.4%. Stocks were subdued, trading in a narrow range as investors brace for inflation data. CPI report coming out tomorrow morning, 8:30 a.m. Wall Street time. Complete coverage, of course, here on Bloomberg Radio. That report, though, could signal if the Federal Reserve will once again be lifting interest rates. 10-year yield, 3.42%, with the 2-year, 4.03%. Bitcoin, a major market story today, rallying 3.2%, but back above the psychological $30,000 level. Bitcoin at $30,079 right now. Crude oil up 2.2%, 81.48 a barrel. Spot gold, $2,004 the ounce, up by 0.6%. So again, recapping, S&P ends the day unchanged. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. What are we calling that? Flagging?
Flagging.
Flailing.
Yeah, flailing. Flagging.
Or something. What was it? All right, interesting market day. We're just kind of marking time here. Hey, now marking time is the money going into the EV space because it continues to roll in. Last month we talked about VW boosting its rolling 5-year spending plan by 13% to $193 billion, more than 2/3 going to software and EVs. Today, Hyundai Motor committing to spend around $18 billion by 2030 in its shift to electric cars. So let's get to it. Another edition of Bloomberg Plugged In, our weekly look at the world of EVs. And back with us is Bloomberg Technology co-host Ed Ludlow in our Bloomberg 960 studio in San Francisco. Ed, you know, there's lots of questions about the outlook, what kind of recession, what do global central banks do? But man, those automakers continue to plow money into the EV space.
Yeah, and I've been really excited to catch up with you because I think for once
long.
it's been weeks and a lot's happened, you know, like a lot of data, a lot of news around the world of electric vehicles. What's really exciting about it is so much of it is outside the United States. You know, we could start with India, for example, which is just a market that's so different. You know, you guys out there in New York, I'm in California. We're used to the idea that consumers drive their own 4-wheel cars everywhere, normal. India is a completely different market, and what's changed there is the investment that's gone into vehicles of all types, 2-wheelers, 3-wheelers, 4-wheelers, buses, and, you know, there's just a really astonishing piece from our colleagues at Bloomberg New Energy Finance who just basically went away, aggregated all the data sets, and the headlines are such that EVs across all vehicle types doubled in India in 2022. Now the data's in. And when it comes to passenger car sales, they tripled. And there's a lot to discuss around the reasons why, but that's a really interesting data set when you consider that actually it's not the United States that's driving an electrification transition. You have to look actually globally and look at some really interesting markets.
Is it because they have to transition? Like, what is it about India in particular?
Yeah, look, there's certainly government support in a market like India. The government put in place a subsidy of around $3.5 billion, which was designed to encourage domestic manufacturing. But it kind of comes down to this really simple idea. There's 1 billion people in India, and many of them take transport outside of that passenger car space. There are many more models available. You see the ride hailers. There are many different startups out there doing food delivery who are using electric vehicles because the cost of operating them is actually, in many cases, more operationally efficient than relying on gas. And, you know, rising interest rates, the rising cost of fuel in 2022 was a major story that hit all economies around the world.
Hey, Ed, you were talking about how it's important to look globally, and obviously you were mentioning India. What other corners, when we're looking globally, who's winning when it comes to this EV battle versus those who are losing and are lagging behind?
You know, Tesla's still the market incumbent in many geographies. I think the piece of news that caught my eye in the last 24 hours is kind of some fighting talk from Hyundai in South Korea, right? They are making this commitment of around $18.2 billion to electrify. By 2030, they want to have 31 electric models across both Hyundai and their sister company Kia, you have to compare and contrast that number. Is $18 billion of capital commitment to electrify a lot by 2030? Well, by comparison, Ford is committing almost double that to electrifying by 2026. GM has a $30 billion commitment by 2025. So actually what we see here in the United States is some of those automakers much more aggressive with shorter term deadlines, much bigger pockets of money. But for Hyundai, they do have an ambition of being the third biggest seller of EVs in the world, and they've at least given us a sense of what they're willing to pledge to make that happen.
Hey, how do you think about it, Ed, broadly? President Biden's Inflation Reduction Act, as you know, requires car makers to build EVs in the U.S. in order to be eligible for subsidies. Is that going to be enough to get non-U.S. automakers to create facilities here, or will they just not worry about getting that subsidy?
So it's a really interesting case study in Hyundai's case, because currently, while they do have some manufacturing facilities in North America, they're not for electric vehicles. The basics of the Inflation Reduction Act require manufacturers to have their electric vehicles manufactured in the United States, but also have a majority component base and raw material base from within the United States. What you see from Hyundai is them saying, well, hold on, we're starting from a pretty low base here. We don't even have a factory right now in the US that's building EVs, and they're pushing back for some concessions. You have to remember the goal of the IRA is also to onshore manufacturing, not just protect supply chain.
Right.
But it's a big political issue as well. We look at what Ford has done with Chinese battery partners like CATL, for example, a politically controversial move in the context of the IRA.
And Ed, you brought up Tesla, so I wanted to bring up this story that Carol was looking at as well in the terminal in recent days, and looking at how Elon Musk has been deepening its China investment amid obviously these growing trade tension. How difficult and, I guess, tricky of a situation is he putting himself in when you're thinking about Tesla, the U.S., versus obviously that what on the other side of things when it comes to the strength in China?
He's like, oh, I don't care. I'm just going to do it. It
Right.
feels that way.
It's politically tricky. What we know, the news of the week is that Tesla is going to build a second facility in Shanghai, which is a battery facility, alongside the existing car plant it already has and wholly owns. This battery facility is important because in China, there's great demand for energy storage products, not just battery cells that go into cars. So you can see them serving that demand. In fact, the kind of pledges in terms of ramping battery output in China far exceeds the investment plans that across all players we have here in the United States. Where it gets more tricky is where do those products end up, right? And, Tesla, again, we've reported that they've been kind of communicating with the White House their intention to build a battery facility here in America with CATL. What we understand from sources is they would wholly own the factory and license technology designs from CATL. But with Republicans in particular, that's a hard sell. And with Biden, it's a hard sell because it's contrary to the ambitions of the IRA. But it's very hard to navigate. In China, for example, Shanghai accounted for 50% of all the EVs Tesla built last year. There's big demand in that market domestically, so it doesn't really matter how it's perceived in the US. But some of those were exported to other markets as well. That said, it's just one part of Tesla's strategy to add a dozen facilities or so by the end of the decade all over the world.
President Biden, was it just this week or recently, he's kind of even leaning bigger into electric cars, and he really wants consumers to ramp up. Is this going to make a difference? Because I got to say, I've been looking at electric cars for a long time. Initially, it was hybrids, then it was EVs, and I'm not quite sure what I'm waiting for. The infrastructure, prices to come down, more selection. But I do wonder what it really takes here.
Yeah, I mean, there's been multiple facets to the story so far this year. Really quickly, one has been, automakers chasing the tails of others. So Tesla cut prices and all other automakers cut prices. And part of their reasoning of the time was to make their cars compliant with what they thought were the terms of the Inflation Reduction Act so that they would be eligible for those incentives. Remember, there was a price cap, which in layman's terms meant you can't just make super expensive electric SUVs. You can't just do that and then hope that the price is brought down by a federal credit. The idea is that they wanted to set the bar much lower, make EVs more accessible. That's one part of the story. The other is just consumer choice, right? Many more models makes for healthier competition. Competition makes for pricing adjustments, which is more attractive to the consumer.
Right.
And that was a big part of the story we just discussed in India. All over the world, there's more consumer choice.
And you brought up how Tesla has been having these different price cuts multiple times this year. What are analysts saying as far as the slowing demand there and how much of a problem that could potentially be still for Tesla?
Yeah, look, we go into first quarter earnings a little bit worried about margins based on analyst notes. You know, if you cut prices, then the impact can be to the bottom line. That said, Elon Musk has been pretty clear and consistent about this. They're willing to sacrifice profit at Tesla to maintain the growth rate of near to 50% annual growth. In other words, we might not make as much money on our vehicles, but we want to sell more and more of them basically everywhere. And Tesla, more than any other automaker, can use the lever of price cuts to do that. We found clear evidence in the first 3 months of this year that cutting prices unlocked new pockets of demand for Tesla. And so wouldn't be a surprise to see them do it even more in the coming months.
Mr. Ludlow, do you have an EV? I can't remember if I've asked you.
I don't, and I've been really honest about this on Twitter, that when I looked for a car 6 months ago, it wasn't an option for us. It might be now, but at that time, the wait time for Tesla was nuts, or the EV was outside of my price range.
I know, we're all waiting for some of those prices to come down. Don't stay away. Don't be a stranger. Really good to do that roundup with you. Our Ed Ludlow, of course, co-host of Bloomberg Technology at Bloomberg News. You can catch him on Bloomberg Technology noon on Bloomberg TV daily with Carolyn Hyde. You are listening and watching Bloomberg Business Week. Carol Master along with Jess Metton. But let's head off to Nancy Lyon. She's out in D.C. She's got to check on world and national news. Take it away, Nance.
Thanks, Carol. Louisville police will be releasing body cam footage later today of yesterday's shooting at Old National Bank. 5 people were killed, as well as the shooter himself, who was an employee at the bank. Police say he bought the AR-15 rifle used in the attack legally. Louisville Mayor Craig Greenberg says he's committed to finding ways to combat gun violence.
The laws we have now are enabling violence and murder. It's time to change those laws to save lives and keep our people safe.
Mayor Greenberg specifically pointed to a Kentucky law that allows firearms used in a crime to be auctioned off. He says they should be destroyed. Democrats have picked Chicago as the host city of their 2024 National Convention.
The Democratic National Committee says the Windy City sits in the blue wall of industrial Midwestern states that have swung the last 2 presidential elections. Chicago beat out competing bids from New York and Atlanta, which all pitched their own visions of why they represent the Democratic Party's progressive future. The pick also puts President Biden a step closer to announcing his re-election run. The host city was the president's final call. The convention will be held August 19th through the 22nd next year in Chicago. In Washington, I'm Nathan Hager, Bloomberg Radio.
New York Governor Kathy Hochul is the latest governor to take action to protect abortion, following the ruling from a conservative Texas judge to ban the drug mifepristone that's been approved by the FDA for abortions and used legally for decades.
Last year, the attacks were on abortion procedures. This year, medication abortion. What's next? Contraception, birth control? Well, I'm here to say, not in New York, not now, not ever.
Hochul says the state will take up a bill requiring insurers cover medical abortions. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, S&P finished unchanged, NASDAQ in the red. NASDAQ down 58 points today, dropped there of 0.4%. The Dow up 98, up 0.3%, and a late day fade for the S&P 500 index, again ending unchanged. Stocks lack conviction, trading in a narrow range as investors brace for inflation data tomorrow morning at 8:30 a.m. Wall Street time, and that could signal if the Federal Reserve will once again be lifting interest rates. As for the May meeting and what to expect, Brian Jacobson is Senior Investment Strategist at Allspring Global Investments, and he was our guest right here on Bloomberg Business Week.
So if they hike 25, despite what we think is going to be somewhat weaker data, it suggests that they really do have their blinders on and aren't going to be properly reacting to what is likely to be that slow slide into a recession here.
10-year yield 3.42%, with the 2-year 4.02%. Spot gold up 0.6%, now at 2,003 the ounce. Bitcoin, big story today, rallying 3.3% and back above 30,000 at 30,108. West Texas Intermediate crude up 2.1%, 81.38 a barrel. Albertsons is anticipating higher labor costs and a more difficult consumer environment in a new sign of caution from big American retailers. Albertsons down by 1.6% today, and Kroger's lower by 1.9%. Google is dropping its vaccine requirement for entry into any of the company's buildings, this according to CNBC, citing an internal memo that it viewed. Again, recapping, stocks unchanged today. S&P 500 index down by less than half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. Well, calls for financial literacy abound, no doubt about it. We often talk with guests about it, and our next guest is working on just that. Let's bring in Lule Demase, U.S. CEO of the social investment community and platform eToro. She joins us via Zoom in Hoboken, New Jersey. Lule, so nice to have you here with Jess and myself. Remind everyone, though, exactly what your platform does, who uses it, and how they use it.
Pleasure to be with you today. Thanks for having me. So eToro is a platform that is centered around social investing at the heart of it. We have about 30 million global users. And then on top of that social investing sort of ecosystem of conversation that happens on our platform, one can trade and invest in stocks, ETFs, crypto, and many more things on a global level. The users on our company are really people, what I call affectionately tomorrow's investors. So millennials, Xers, young Xers, and Gen Z. The platform itself is designed to be, at its core, a practice-first investing and education-first investing.
Well, and so just because of the vantage point that you have, you're not kind of one of our traditional banks, but yet, you know, the last month, because of 3 bank collapses, it's been a lot of nervousness when it comes to the financial community and banks specifically. What impact have you seen on your platform as a result of that nervousness, good or bad?
Yeah, no, it's a great question. And I think what's happening is what I call now an ambidextrous sort of behavior is happening among our investors. And you look at it at the broader ecosystem level and you see the similar trends. Now, remember, because our consumers are younger, they have a longer time horizon. So they tend to be a little bit more long hold for the long-term type of investors while they're still opportunistic. So funny thing happened. The bank crisis news hits the wire, and we have more buyers of crypto on our platform that same day and beyond, more transactions and options. We also have options on our platform, U.S. equity options, and more long positions started to be birthed. So you've got this interesting dichotomy of retail investors seeing crisis, which is what we've seen for a long time, right? We just thought this rate environment would have broken the back of that, but it hasn't quite broken it. And that's great news, which is that they look at crisis both as a place to shelter and also take an opportunity.
So more money coming in versus going out.
More money coming in. And because remember, ultimately, because we have a longer sort of enduring customer in terms of their timeline, they're not jumping off the fences too fast.
Okay.
What stood out to me, because you were talking about things like crypto, other speculative corners of the markets, also options, it kind of makes me wonder, when we're all debating about the market and the Federal
Isn't it
Reserve,
wild?
if people, especially when you're talking about retail investors right now, going back into that, if we're still seeing a bit of this FOMO in the markets, right?
Not really, no. We're definitely seeing people more value oriented and really appreciating diversification. The one sort of, the market.
Wait, do you think crypto is a value play, or do you see that as just? How did you like that?
No. I mean that to say that they are diversifying, right?
Okay.
So,
okay.
One of the things I love to do is also make sure that I push back on this narrative of either or. What we're seeing in our investors is they're too savvy to be trapped in the retail investors are too dumb to partake narrative, and they're too savvy to not diversify with solid diversification instruments like a diversified ETF, for example. So we see investors doing that and more, right? So it isn't about a frothy aspect to it as it is, again, an opportunistic long-term as well as an opportunistic investor that we're seeing.
Luli, so you have privy to these 30 billion global users and what they've been doing, let's say, over the last month or so. In terms of things that they've been searching on, is there one or two things that have been among the most searched amid the nervousness that we saw in the banking sector and the markets overall?
Yeah, what's interesting about our platform is because it's a social platform, we actually make this available to people as well, not just to ourselves. So when somebody signs up on our platform, they can see what are the top searched and what are the top transacted, either digital assets or securities on our platform. And so what you see is, again, back to that bifurcation that I just told you about, which is they'll be searching SPY, they'll be searching instruments that are more diversified. At the same time, they'll be searching, for example, tech stocks, which they have felt have been undervalued, and now in this market environment is surging. So there's this element of, again, what's a long-term play and also what's opportunistic that's happening in the search behavior. And the 30 million, just to be clear, are users, not necessarily account holders. Account holders, we have about 3 million over in globally.
Oh, appreciate that. Okay.
You did bring up tech stocks, and especially we're going to get into earnings season very soon with the banks, but just after that we will hear from technology companies. But with technology in particular, what exactly are you seeing there? And are these longer term holding trends with investors going back in to hold that, or is it more short term?
Both. It's interesting. So when we look at our equity holdings, we see people still going into these tech plays. And also, as I said, diversification, right? So we see healthcare names in those names as well. We see ETFs that are T-bill oriented in those names. So our top names have, again, this diversification element to them. And then we also see activity in similar names like that in our options platform, which we recently bought. So again, it's really interesting, sort of like an investor who is more nuanced than the headline narrative is telling.
Is there a cash investment component where you're seeing a fair amount of activity as well, or cash-like?
We do see customers holding cash balances. Now, obviously, we're not a bank, right?
Right.
So our customers also hold cash at their banks or other money services providers, but definitely we see cash holdings as well. And that's something we always tout, we think.
Is it always there, or is it higher than it was or lower than it was? A little context.
Not necessarily higher or lower. And part of it could be because of the fact that, as I said, our investors also have bank holdings, right, in terms of cash at their banks.
Well, I just wanted to quickly, because we only have about 45 seconds left, but I mean, when it comes to you in financial literacy, what do you think financial literacy really means to you, and why is this so important for people?
Yeah, and one of the things I think is really important about financial literacy is to differentiate between the debits and credits of your checking account and your banking relationship versus the savvy of becoming financial literacy when it comes to investing and trading, right? That is our lane, teaching people how to invest and trade. And what it means to me is a simple truth, which is that people cannot have long-term wealth without participating in the capital markets. So our commitment is to create the platform that allows them first to practice We have an award-winning practice platform where you don't even have to put any money down. And then once that practice is, they feel like they have their legs under them to start investing.
Right. They get a comfort level. They understand the language. They understand how it all works. Lule, thank you so much. Come back soon. Lule Demose, U.S. CEO of eToro, joining us via Zoom in Hoboken, New Jersey. You are listening and watching Bloomberg Business Week on this Tuesday, and this is Bloomberg.
company news headlines on Bloomberg Radio.
It's 4:53 on Wall Street. From Bloomberg World Headquarters, I'm Charlie Pellet. The American gold giant Newmont has made a fresh bid for Australian rival Newcrest Mining, sweetening its record offer to $19.5 billion. Today, we had shares of Newmont down 2.3%, Newcrest Mining up 6.6%. CarMax beat Wall Street's earnings estimates as the auto retailer squeezed more profit from each vehicle. And with more on the quarter, here's Bloomberg's John Tucker.
Charlie, CarMax was able to counter a sales drop and softening used car prices. The Richmond, Virginia-based car dealer chain is benefiting from a stabilization in the pre-owned vehicle market after sliding for much of last year, buoyed by sequential industry-wide gains in recent months. But that's meant fewer transactions as some buyers are put off by the high costs. CarMax said the average retail selling price of a used car fell 9.3%, or about $2,700. Net sales in the quarter were $5.72 billion, which missed analyst estimates. Charlie?
And that's John Tucker reporting CarMax shares up today by 9.6%. Carvana shares up today by just about 4.8%. Albertsons is anticipating higher labor costs and a, quote, more difficult consumer environment in a new sign of caution from big American retailers. Albertsons down 1.6% today. Kroger shares lower by 1.9%. And those are some of the company stories we're following for you this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Yes, indeed. Bloomberg Business Week on this Tuesday. Carol Master along with Jess Met. Let's get back to world and national news. Off to Nancy Lyons we go in our 991 newsroom in D.C. Hey, Nance.
Thanks, Carol. The Manhattan District Attorney is suing Ohio Congressman Jim Jordan in an attempt to keep the House Judiciary Committee from interfering with his probe into former President Trump. Alvin Bragg filed the lawsuit in federal court in Lower Manhattan. The suit claims Jordan and the Judiciary Committee is guilty of a brazen and unconstitutional attack on the prosecution of Trump. Investigators in Louisville, Kentucky are still working to uncover the motive behind what led a former bank employee to open fire on his colleagues. The gunman, according to police, killed 5 people and wounded 8 others inside Old National Bank in downtown Louisville. The suspect died during the attack. Police Chief Jacqueline Gwynn Villaroyal.
We have learned that the suspect in this incident was a current employee with Old National Bank. We have also learned that he purchased the weapon used in this tragic incident on yesterday, on April the 4th. He purchased the weapon legally from one of the local dealerships here in Louisville.
Chief Villaroyal says they'll release body cam footage later in the day. The International Monetary Fund is reducing its forecast for world economic growth and fears it might go down further because of risks to the banking system. Bloomberg's Irv Chapman reports.
Banks are coping with higher interest rates imposed to fight inflation. But there's more, the IMF's chief economist, Pierre-Olivier Gourinchas, said in a Bloomberg interview.
Banks are going to look at the outlook. They have to pay more for deposits. They're losing deposits. They're booking losses on long-dated fixed income assets. And they're going to be a little bit more prudent in extending loans going forward. And that could weigh down further on economic growth.
Gourinchas said relatively strong growth in China and India will help the world economy, at least in the near term. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Jess.
All right, Ms. Lyons, thank you so much. Carol Master along with Jess Matten live in our Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. This is our most read story on the Bloomberg in the past 8 hours. We've been talking about low volume in the market. We're kind of waiting for bank earnings, the CPI report. It does feel like kind of a lull. Having said that, when a billionaire gives a chunk of change to an Ivy League, it gets our attention.
It does, and this is a big one. So looking at Citadel's Ken Griffin giving $300 million to Harvard University. So the donation, when you're looking at this, it's